Welcome to the Decentralized Daily podcast, where you get your daily dose of cryptocurrency news and information. The crypto news that matters to you. Nothing on this program should be confused with investment advice, because we don't give you any. It's not that kind of show, guys. Just the facts here, just the facts. So sit back, relax, gather your thoughts, and prepare yourself for today's market movers in cryptocurrency.
All right, guys, welcome to another episode of Decentralized Daily. It is March 7th, 2018, and we're looking at a red market once again. So I'm going to take you all through the top 5 in market cap here. We've got Bitcoin coming in number 1 at $9,827.69, down 8.43% at the moment. We got Ethereum at $745.91, down 7.36% over the last 24 hours. We've got Ripple at 85 cents, down 6.2%. Bitcoin Cash at $1,097, down 8.15%, and Litecoin rounding out the crowd at $182.25, down 6.68%. So pretty much everybody in the red, and the top 5 are doing pretty good comparatively. I mean, if we take a look a little bit down the chart, we've got Cardano down 16% to 23 cents. We've got VE Chain down 16%. I mean, it's just a channel of red here. Walton Chain down 26.25%. Very little green. I mean, if we take a look, I always like to give y'all a little green on these days. And in the top 100, we've only got 3 coins showing a positive percentage over the last 24 hours. We've got Waves at $6.45, up 5.7%. Genesis Vision at $37.46, up 1.69%. And Siren Labs token at 62 cents, up 1.04%. In the top 100 of market cap on CoinMarketCap, it's only showing 3 coins in the green. So let's take a look at the news and see what caused all this red in the market today. So there's actually quite a bit of stuff that came out. The Japanese authorities came out and issued punishments to several cryptocurrency exchanges. The Fed came out with a crackdown on basically exchanges as well. There was some news that came out about Binance and a third-party app that got hacked and was doing some trading on their exchange. Just a bunch of news that came out. The 2 that we're going to cover, we'll start with one that came out from CNBC.com on the Japanese authorities issuing punishments to several cryptocurrency exchanges. So the article reads, Japanese regulators on Thursday issued punishment notices to several cryptocurrency exchanges and forced others to halt business in an effort to shore up customer protection after the $530 million theft of digital money from Tokyo-based Bitcoin exchange CoinCheck. A senior official at financial services agency told reporters at a briefing on Thursday it had confirmed CoinCheck had funding to reimburse its customers for digital NIM coins stolen from its exchange. It said the company would announce details of its reimbursement plan later in the day. The regulator issued business improvement orders to CoinCheck and 6 other exchanges, saying the 7 exchanges lacked the proper and required internal control systems. So, not so sure this is a bad thing. I mean, regulation is always going to be scary for the market, and it's really going to drive prices down anytime we get any news on it. Most people are going to consider it FUD, and they are going to sell off just in fear of what the regulation might mean in the long term. But, I mean, shoring up proper business practices, backing up the monetary value of the coins that they have in their system so they could reimburse customers. I mean, honestly, most of these exchanges are making money hand over fist right now, so they should have the capital to reimburse customers if something, if they are hacked. And if they don't, they have to know that nobody's going to come back and use them anymore. So that alone should give people some sense of security to use these exchanges. But if that doesn't, the government's actually cracking down on them and making them implement better security practices and more regulated, basically platforms for the users. I would think that would, also incite more security for the users. But apparently it's driving people away. I don't know. That's strange to me. But let's go ahead and move on to the Fed crackdown, which is basically the same article, but for the U.S.-ish. So this one came out from the New York Post, and it reads, the Fed crackdown on cryptocurrency exchanges slams Bitcoin. The article is by Kevin Dugan and Carlton English, and it reads, federal regulators widened their crackdown on crypto assets on Wednesday by requiring the various platforms that trade Bitcoin and their digital cousins to register as exchanges. News of the rule change from the Securities and Exchange Commission sent the price of Bitcoin, Ethereum, and other digi assets down as much as 8%. The SEC is going to require the platforms like the Winklevoss twins' Gemini Exchange to follow the same stringent rules as the New York Stock Exchange, or get an exemption to become dark pools that get less scrutiny but often much less traffic. It's basically the same thing. They're pushing all the exchanges that if you're going to call yourself an exchange, you have to be registered as an exchange. Which, that makes sense to me. Logically, would I have preferred them to leave it alone and let's just roll on with what we're doing? Probably. But, legally, I feel like they have the right to push this on all the cryptocurrency exchanges. Yeah, some people might disagree with me, but if you're going to call yourself an exchange and legally you're trading securities, then you probably should be regulated as an exchange, and that should allow customers also to get that security blanket like we were talking before. And there are going to be exchanges that come out that are going to follow these rules. I think Overstock.com, I don't believe I remember what their exchange is going to be called, but I know they were saying that they're going to be 100% SEC compliant. And really, I think that is going to drive some of the more mainstream into the market using those type of exchanges. If you look at Robinhood, they're selling cryptocurrencies. That I don't know that it pumped the price of the ones that they put on the exchange any, but it definitely brought it more into the mainstream investors' hands that way. And the more people that see these exchanges as being legal and similar to E-Trade or something like that, I feel like it's just going to bring more people into the market in the long run. But I guess time will tell. We'll see. I could be completely wrong. So we'll check it out a few months from now and see if what I said has any bearing on what is happening. But I appreciate y'all listening to another episode of Decentralized Daily. That's really pretty much all I've got for y'all today. So we would love to hear from y'all in our comments, or hit us up on Twitter at DTalk Podcast, on YouTube at Decentralized Talk, on Facebook at Decentralized Talk, or on our website at decentralizedtalk.com. It's been good speaking with y'all today, and have a wonderful day, guys.